Hi traders, you are welcome to this video and you are welcome back to the Forex Geek channel. Okay, and this particular video we are going to be looking at one of the most precise strategies for gold scalping. Okay, this strategy is specifically designed for XAUUSD. As you can see, we are on the XAUUSD chart, right? So if you are a trader who loves capturing those quick market movements, then this video is just for you. Okay, a lot of traders like trading gold, but some traders don't exactly know the best strategy to apply when trading gold. In as much as gold is a favorable currency pair to trade, it can be very dangerous if you do not know the right strategy to apply. Okay, because gold is volatile. It's very volatile. It moves fast, and compared to some other currency pairs, the distance that gold will move that will give you 10 pips, it's not the same distance that uh let's say the euro USD will move and give you 10 pips. It might take a shorter period of time for gold to get to 10 pips compared to the time it will take for the other currency pairs to get to 10 pips. I'm just using that as an example. Okay, so it's better for you to know the right strategy to use for gold before you even start trading it. Okay, now it doesn't mean that this strategy guarantees profit. It does not mean that. Okay, but one thing for you to know is that at least the strategy can be very beneficial for you. Now, why scalp gold? Gold is a fantastic asset for scalping because of its high liquidity and strong volatility, which create frequent price movements. Now, these factors mean more opportunities for quick trades, allowing you to jump in, catch a small movement, and get out fast. You know the vibes. With gold scalping, though, precision is everything, right? You are aiming to capture those quick moves, those short-term gains, which means you need to understand the asset's behavior in both trending and ranging markets. And that's exactly what we'll cover today. All right, let's jump into the setup for this strategy real quick. For this strategy, we'll be working on the 5 minute time frame. So I'm just going to go to the 5 minutes time frame, right? Now, gold can show strong movements on this time frame without being overly volatile. Okay, it's ideal for spotting short-term trends and patterns, perfect for scalping. First, we are going to be adding two key indicators. We are going to be adding the 20 EMA, all right, the 20 EMA and the stochastic oscillator. These are the two indicators we are going to be using for this strategy, all right. Now, the 20 EMA will help us to track short-term trends and is crucial for identifying the trend's direction. On the other hand, the stochastic oscillator is our entry and exit signal, helping us to spot overbought and oversold conditions. So these indicators work well together to keep you in line with the market's momentum while giving you precise entry and exit signals. Okay, now let's go over the exact steps to use this strategy. Okay, we're just going to be looking at the way to use this strategy. We use the 20 EMA to spot the trend direction. As we can see, currently gold is in a bearish trend because the EMA has given us the direction of the trend. As price is trading under the EMA, it shows that this is a bearish trend. Okay, so the EMA has helped us to identify the trend, right? Now we use the stochastic oscillator to determine when to enter and when to exit, right? For a buy trade, we wait for the stochastic oscillator to drop below 20 and then cross back up, signaling that the asset is oversold and likely to move up. Okay, for example, we can see that this is a bearish trend, so the stochastic already gave us a sell signal at this point, and you can see it was around that point that the price of gold was bouncing off the moving average, which was serving as a dynamic resistance. So we should have entered a sell trade around this point, perhaps around here. By now, maybe it would have been in about 8 pips. or close to 10 pips profit by now. Okay, like if we had entered a sell around here, and can you see the price is still going down. So the moving average tells us that this is a bearish trend, and the stochastic tells us that we should enter a sell somewhere around here. Okay, now once you enter a trade, it's crucial to set your stop loss. Just for example, in a sell trade, we are using this as an example. Set your stop loss just above the swing high, the previous swing high. If you are a scalper, so you want to be looking for tight stop losses. Okay, if it was a buy trade, once after you enter the buy trade, you set your stop loss just below the swing low. All right, now we should also be targeting 1 to 2 risk to reward ratio. Okay, so it's good to use proper risk to reward ratio. So if you are risking $1, you should be targeting to make $2 profit at least. All right, that's what we call risk to reward ratio. Okay, now in terms of risk management, always use a strict stop loss. I need to emphasize that. Okay, and never risk more than 1 to 2% of your capital per trade. Okay, if you have $100 capital, it's not proper that you risk more than $2 in one trade. If you have $1,000 capital, it's not proper that you risk more than $20 in one trade. Okay, it's just for the sake of risk management, because preservation of your capital is more important than making profits. All right, and then it's important that you avoid over trading. This is a quick strategy, but don't get caught up in taking every setup you see. Okay, quality over quantity is key, right? And then know your trading session. Gold trades differently in various sessions. The London and New York sessions tend to have the highest volatility, which is ideal for this strategy. Okay, so it's a very, very simple strategy. All you just have to look out for is where is price respect to or relative to the moving average. With respect to the moving average, where is the price currently? If the price has been trading below the moving average, it means it's a bearish trend. If the price has been trading above the moving average, it means it's a bullish trend. Once you have identified the trend using the 20 EMA, the next thing to do is to look for a signal in the direction of the trend. Okay, look for a signal from the stochastics. So since this is a bearish trend, look for a signal when the stochastic is in the overbought territory, pointing downwards. The main line should cross over the signal line. This green line should cross below the red line before you enter a sell. Okay, if it was a bullish trend, then you look for buy signals only. So basically, that is how this strategy works. You now have a solid foundation for scalping gold effectively with precision. All right, remember, like anything in trading, practice makes perfect. Try this out in a demo account to get a feel for it, okay, before you start trying it out on a live account. So if you found this strategy helpful, don't forget to give this video a thumbs up and hit that subscribe button for more forex strategies and trading insights. See you in the next video, and happy trading.